By the end of it, the bulls were prevailing again, and it was an all-round green session.
Absolutely, an all-round green session. Midday, I really did think that, is this the tide chaining right now? Yeah. And, last 7 days of gain is what we saw, and that's what we sustained today. So it's a good day coming in, recovery coming in the broader end of the market as well.
Absolutely, and it was the global markets which, were helping us actually recover from those slight morning blues, so to speak. And that's because there was a nice risk on across Asia. Many of the markets are up 2.5% today in Asian trade. And that's thanks to some signs of a climb down coming in from Mr. Donald Trump on, the Fed chief. He's saying he has no intentions of firing him. And also on China, some comments coming in saying that these high tariffs of 145%, they're obviously not sustainable. So all that led to good global risk appetite. It translated into good gains for us. And therefore, you see the Nifty from that dip that, we were noticing around 10 o'clock. From there was a nice recovery and we moved higher. Today, there was a very interesting sort of divergence between two sectors. Banks decided to take a bit of a breather after the stellar, stupendous bank rally that we've seen. So the Nifty bank ended about 0.5% lower. But look at IT. IT more than made up for it, and the IT stocks were gaining across market capitalization, mid cap, small cap, all kinds of cap. IT stocks were ruling the roost. And Vinny, by the end of it, even the mid cap market, the mid cap index dipped into negative actually in the morning. But by the end of it, mid-caps were roaring along and days high on the mid-cap index.
Absolutely, days high on the mid-cap index, and small-cap also should be, because at one point of time, small-cap was really underperforming throughout the day. And then the second half of the trading session, we saw the small-cap also coming back. So yes, the broader end of the market also has done well. Few names also that I would like to highlight. Sona BLW saw a good surge in today's trading session. A lot of auto names also were trading in the green. So we did have M&M, Tata Motors, as well as some of these other autos which were moving and buzzing in today's trading session. But on that note, let's get started with the show for today, and we'll start up with the top movers and shakers for the day. Hormaz is here to tell us about that.
Well, it was an interesting trading session, wasn't it? And it was because of the plenty of earnings reactions that we saw during the day that kept the broader markets on a firm footing. Waaree Energies at one point was up almost 20%, but still ended 15% higher. HCLTech, of course, was the star of today's session, at least for the Nifty names, with a 7.5% higher there. AU Small Finance Bank, after some positive management commentary, ending 8.5% higher. And Vardhaman Special Steels, the surprise package of the day, 20% higher after the company announced a capex plan after a not so impressive earnings performance. But Havells, of course, was the underperformer today, ending 3% lower. Well, newsmakers aplenty. Niva Bupa, after a positive brokerage initiation, ended 8% higher today. Aurobindo Pharma, Lupin, some positive news flow there as well. Production in Tesla returning to normal led to Sona BLW surge, and of course Premier Energies carrying on from where it left off in yesterday's trading session, another 4% surge today. The results of HCLTech rubbed off on other IT stocks as well, particularly in the mid-cap IT space. And take a look at this. Almost every stock ending anywhere between 4 to 6% higher. Of course, all of these names are yet to report results, so it'll be interesting to see how they fare after the numbers come out sooner or later. And lastly, some stocks that saw profit booking today. A lot of these consumer durable names were in this list, be it Blue Star, be it Voltas. Crompton also seeing some profit booking, as did JB Chemicals and Pharma. But overall, a green day, but some profit booking in select pockets as well.
Okay, all right, Hormaz, thanks very much for the detailed breakdown of the day. So let's get started. We have our guests joining in now, Mayuresh Joshi of William O'Neill, as well as Nagaraj Shetti from HDFC Securities. Gentlemen, good afternoon. Good to have you on. Nagaraj, if I could come to you first. So the market is very clearly showing tremendous momentum. What would your advice be on the Nifty and even the Bank Nifty, where today perhaps it was just a pause after what has been a very strong rally?
Hi, good afternoon, Surabhi. Nifty has been in a spectacular run, no doubt, to 2,500 points of up move without showing any reasonable downward correction. Though Nifty placed at the higher levels, though showing some volatility at the higher levels, there is no confirmation of any reversal pattern building up or any tiredness building up at the higher levels. I think having moved up recent hurdle of around 24,200 levels, I'm expecting Nifty to move towards the 24,600 to 24,800 zone in the near term. At the same time, Bank Nifty has moved into a new all-time highs, showed some slight nervousness from the higher levels. Still, there is no confirmation of any bearish sign at the higher levels. I'm expecting more upside to come from here onwards after a small consolidation, and the next upside target will be around 57,000 in the near term.
Okay, surely keeping an eye out on those levels of there. Mayuresh, what is your view coming in as well? In the morning, Nigel was talking about that one level, 24,350, and we did see a recovery coming in from the day's lowest point for the Nifty, but we have not managed to sustain. So in overall the market scenario, what are you watching out for? Anything specific that we should keep an eye out on?
Afternoon, Vinny. No, I think two things. One, I think as far as earnings are concerned, our own sense is that Q4 might still be a little bit soft and patchy, but the expectation largely getting built out because markets are always forward-looking is that with tax cuts around the corner, expectations of a better monsoon, rural, semi-urban and urban consumption recovery might be seriously on a recovery path. And therefore, I think Q1, Q2 will lay base as far as earnings for India Inc. is concerned. And in the second half, you should see significant amount of recovery happening at that. With earnings coming through, my own sense is that government capex, which is expected to continue strongly, private capex can come back very, very strongly as well. And therefore, both from a macro perspective, where crude is expected to come lower and stay lower, trade deficit under control, collections specifically, both direct as well as indirect, expected to remain strong, will mean macros remain on a very, very strong footing. And therefore, outside US, if you probably look at any other market, the kind of euphoria that was built towards China, I think those might reverse a tad bit. And with macros and micros stabilizing for India Inc., our own sense is that the market should be in fine territory as we head into the next few months. So as we see the market, we're in the confirmed uptrend as per the methodology we follow at the cancel methodology. And therefore, I think good relative strength stocks are holding up. Domestic sectors specifically should hold up in this earnings season. And that can be a whole host of sectors that you can probably talk about. Agrochemicals as a space, hospitals as a space. You're probably looking at banks, select NBFCs as well. And therefore, I think outside the domestic sector, I think the other sectors should also start making a comeback, which makes a fair case or an optimistic bull case for India. So I think we're very, very optimistic on India.
Okay. All right, Mayuresh, got it. Let's talk about the sector of the day, and that really has to be IT. IT stocks were the top performers on the back of HCLTech's FY26 guidance, 2 to 5%. And not just that, overall, I mean, like I said, the global environment was a risk-on environment, and US markets did really well, so that also rubbed off. We have Rima joining in with some of the big triggers now that a lot of the key big companies have reported Q4 numbers. Rima.
Thanks so much for that. So for one, there is the NASDAQ rub-off and all the comments about, things easing. But secondly, remember, just still last week, the Nifty IT index had fallen nearly 25%. So some believe maybe it was oversold and due for a bounce back. The second reason is the FY26 guidance was not as bad as what the street was fearing. Infy gave a guidance of 0 to 3%. HCLTech is talking about 2 to 5%. So it's not the worst case scenario, and both the companies reiterated their margin guidance. The third reason is the Q4 deal wins were very strong across the board. HCLTech, for instance, their total deal wins went up to $3 billion, a jump of 40% sequentially. And also remember, with the correction that took place over the last 3 months, valuations of IT companies also came to fairly attractive levels according to a few people. So for instance, Infy and TCS was trading at valuations of the long-term valuation multiple, the free cash flow yield, the fact that they give a buyback was, seemingly fairly attractive for a few people. And that's the reason why we are seeing this big bounce back and a rebound in IT over the last 3 days.
Okay, surely keeping an eye out on the IT pack going forward as well. Nagaraj, what's your view coming in for the IT pack as well? While we're seeing not much of an excitement in terms of earnings so far, but HCLTech, given the commentary that we've seen, we saw the run-up coming in, and today the IT pack was buzzing, and Rima also mentioned a few more points. So your view on the IT, and what are you looking at now? Mid-cap IT names, are they more attractive?
Vinny, yes, certainly said the way it has declined over the last 4 or 5 months, and it has bounced back from the lower level. Certainly, there was a saying that it has bounced back from the oversold level. The overall chart pattern is looking positive. I don't think this pullback rally of a bad market. I'm expecting some important bottom formation around 31,700, 800 levels for the IT sector. And today's upside bounce with the gap up opening and unfilled gap is indicating technically the strength is building up for the IT sector, and I'm expecting more upside is likely for the sector as well as the main important participants of the sector as well as mid-cap ITs.
Okay, all right, got that. Let's move to the next stock on our radar, and that's Waaree Energies. Waaree Energies had a good session today. Stock was up almost 13-14% after reporting its Q4 numbers. Vivek is joining in to tell us what the market made of it. Vivek, so what was behind this big move?
Well, 13% today you may call it, but it's on top of what was yesterday, almost 6% up move. So it's been a significant up move as far as Waaree is concerned. Quite a few triggers for the stock to move higher. First, number one, let's have a look at the results that came in post-market hours yesterday. Along with that, the company also had a conference call today where the guidance that the company has given has been quite strong. Looking at the numbers themselves, revenues this time around higher by 36% on a year-on-year basis. EBITDA more than doubling, margins expanding by over 900 basis points, and profitability higher by 34%. Order book moderated sequentially, so order book at for total 25 gigawatts at 47,000 crore. At the end of Q3, it was 50,000 crore. But what was the kicker was the fact that the company actually has given an EBITDA guidance in the range of 5,500 to 6,000 crore as far as FY26 is concerned, implying that there could be almost a doubling as far as EBITDA is concerned over the base of FY25. Along with that, significant capacity addition, both ingots, wafers, as well as modules is what the company has guided for. Now, one thing that we need to keep an eye out for is that both Waaree as well as Premier Energy, two players as the solar cell module ingots space is concerned, export a significant chunk. In fact, Waaree, almost 20% of total top line has come in from the export market. Day before yesterday, USA has announced significantly higher duties on imports from 4 Southeast Asian countries, including names like Cambodia, Vietnam, and over here, duties are in the range of 6% to as high as 3,500%. So analysts believe that this can act as a significant kicker as far as volumes are concerned, making Indian products a lot more competitive in what is essentially a higher margin export business in the US market. No wonder then Waaree Energy, one of the top movers in the session today.
Absolutely, got that point, Vivek. And yeah, I noticed in that conversation that you had earlier with an analyst, I think from Bernstein, that for Waaree, exports are 20% of their revenue. So can they really capitalize on this opportunity? Take that point. Thank you very much for that. Let's actually toss this to Mayuresh. Mayuresh, your thoughts when Waaree, obviously, and even Premier, they've had a couple of really good sessions. The numbers are very good, no doubt. The con call guidance is also looking rock solid. But what's your sense? I mean, is there more up move from a near term? Because there's also this other whole debate about overcapacity coming in the sector soon when it comes to solar power.
Oh, absolutely, I think. And those are the two risk factors, Surabhi. I think overcapacity is going to be one key element for the sector as a whole over the next few quarters, next few years. And therefore, how pricing will probably play out is going to be extremely critical for the industry as a whole. And therefore, our take is that we really need to watch out in terms of how capacity additions are happening, both in India and across the globe. And therefore, pricing at some point of time in the near future might be coming under the pump. The second element, which we also should not forget, is that China still controls a majority in terms of both cell manufacturing, PV manufacturing in excess of 80%. And therefore, I think both the raw material source that they probably have, as well as the manufacturing prowess, probably still remains with China to a large extent. How much of that can probably get consumed if there are higher tariffs on China, other Southeast Asian economies, as Vivek also mentioned, can also cripple growth to a certain extent, and therefore pricing can get pulled up, which can be inflationary for the end user industries as well. And therefore, how pricing will play out is going to be extremely critical. But again, I think outside these two risk factors, numbers have been fantastic. The guidance has been fantastic. The plant in Texas, 1.6 gigawatt already operational for Waaree, expected to expand that to around 3 gigawatts by 27 and 5 gigawatts as we head into 28. And therefore, I think the US-based manufacturing prowess also gives them an added advantage as far as local exports are concerned or supply is concerned, with raw material sourcing happening from the Indian parent as well. So the momentum can very well continue, but I think one must keep these two risk factors in mind.
Okay, surely keeping an eye out on Waaree Energies. But let's shift focus to two of the pharma names that were in focus today. We had Aurobindo Pharma as well as Lupin, both in focus. Now, firstly, Aurobindo Pharma, why? Its wholly owned subsidiary, that is Eugia Pharma, has received final approval from US FDA. This is for the drug Dastanib tablets. Now, they are expecting this launch in Q1 FY26. The market size of this is around $1.8 billion. And this is as of Feb 2025. The last 12 months data indicates It's a 1.8 billion market size for the company. Do not forget that there is already a lot of competition that has come in for this drug as well. It's actually the innovator is BMS, and post September 2024, we've seen a lot of launches as well as approvals for this drug. In the recent time, we've seen Zydus that had received the approval in India as well. Other than that, tentative approvals had come in for Biocon, Dr. Reddy's and others as well. But nonetheless, it's a big drug coming in for Aurobindo Pharma, and that is what we'll be keeping an eye out on in terms of what will be the amount of sales they actually have during the quarter. Tentatively seems like $10 million sales to $15 million sales for Aurobindo Pharma. Let's move on to the next one then. Lupin, that's in focus today. Why? Because actually 23rd April is the date when we'll see a drug that is mainly called generic Tolvap 10. Now, this is a drug where they are going to be launching and getting an approval for this drug. This drug is going ex-patent from today, 23rd of April. So, we're expecting the approval to come in overnight for Lupin. This is a big drug for the company because then they'll have 180 days sole exclusivity for this drug. Means no competition on that front in the generic player. Revenue generated could be around $150 to $200 million in FY26. And in FY26, this could account to around 25% of Lupin's earnings is what analysts are highlighting. So very big drug coming in for Lupin as well, at least in the pipeline, and latest it could be by Q1 FY26 that we could see the launch coming in, though analysts are expecting much sooner in the next few weeks. So both these stocks, that's why we're buzzing in trade today. But Nagaraj, I'm going to take this to you. In terms of stocks, what are you watching out for in the pharma pack? We've seen the turn coming in for the pharma pack in the recent times as well, though there's a bit of a volatility because of Trump tariff issues and not much of a certainty on that front. But anything you like from Aurobindo, Lupin or any other name?
Yeah, rightly said. Pharma has been limelight recently, and the Aurobindo as well. The recent upside bounces from the lower levels certainly has changed the sentiment for the Aurobindo Pharma. Now placed at the edge of moving above the consolidation, and the 200-day EMA has been surpassed in today's session. The overall chart pattern is looking positive. Today's upside breakout was accompanied with a rise in volume. So currently trading around 1253 levels. I'm expecting more upside in the near term, and 1350 is going to be the next resistance to be watched in the near.
Okay, got that. So that's on a bunch of pharma names today. Mayuresh, just before we sort of wind out for the session, obviously it's going to be earnings season in full swing tomorrow. And we'll soon start hearing from a bunch of consumer companies as well. Tata Consumer, there's Lever reporting tomorrow. I think even Nestle is reporting tomorrow. Is there anything that you're advising to buy in this universe? Growth is missing, but then stocks have not rallied too much. So that's the advantage on the price side.
Yeah, absolutely, Survi. But again, I think a lot of these beverage makers, so I think Radico Khaitan is included in our global watch lists as well. Our own take is that volume should be relatively better. Pricing should remain in their favor as well. The entire premiumization angle should continue very, very well for Radico going forward as well. Margins should get maintained between 14.5%. That most likely to have peaked off. And therefore, I think as improvements happen in cash flows, those debt levels should also start coming off. And therefore, the ratings, rankings, and the earnings pedigree that we see can very well continue with Radico. And similarly, it's the case with United Breweries as well. I think summer season, I think the beer market is full on as we speak. The expectations of pricing coming back in a few key states. And for both these players, I think the input costs will be, whether it's extra neutral alcohol, whether it's molasses, whether it's glass prices, are relatively stable, which provides the margin comfort and support. That is probably needed. So when price is expected to come through, expectation of volume growth and input cost stability, I think operating leverage should play out. So I think United Breweries and Radico is something like this.
Okay, all right, got it. Thanks very much, Mayuresh, as well as Nagaraj for joining in. Great to get your perspective on the market today. With that, we have to take a very quick break. Come back on the other side, we'll get you the top corporate voices along with the key events to watch tomorrow.
Welcome back to Markets Forward on CNBC TV 18. Now let's dive into some key corporate voices we had over the course of the day. Shares of AU Small Finance Bank, that rallied, and this was following the Q4 earnings. Now CEO Sanjay Agarwal believes the company will see reduction in credit costs this year, aiming to improve its ROA. Listen in to what he had to say.
From last 2 months, things have changed dramatically, in my opinion, and I would give credit to the regulator and, of course, the government itself that the focus on growth is back. This year, our credit cost will help us more to build our ROA. So I expect a reduction in credit cost this year, and I'm saying because we are well prepared.
Okay, that's AU Small Finance Bank, and that stock was rallying close to 8% today. Let's also talk about Havells. We caught up with Mr. Anil Rai Gupta, the MD and CEO of the company, to talk about the Q4 performance. Performance seemed okay. The market had some concerns about the sustainability of that growth. Listen to what he had to say.
I think this was one quarter where we actually saw growth coming back in the rural and semi-urban sector as well. The urban had been doing better in the first half of the year. The rural was impacted. It's coming back. Maybe some impact of the budget changes as well as the RBI relaxations. Hopefully that should augur well for the coming times. I think if we see overall, there is a movement more towards the premium, and maybe that is also a strategy of the company. But that is there we see a movement more towards the premium products as well. If you take fans, it is more towards energy saving products. If you take switchgear segment, it is more towards automation and electronics. So there is a movement towards premium segment overall.
Okay, and before we wind down this edition of Market Forward, let's take a look at which are the key events to focus on in tomorrow's trading session. Upasana is here to give us all those details. Upasana?
First up, let us look at the global economic cues. US will be reporting its initial jobless claims. Europe, Philip R. Lane, which is the member of executive board of the ECB, is set to speak tomorrow. Now, let us look at the key stocks that will be in focus on the back of corporate action. First up is Sterlite Technologies. The company has completed demerger of its global services business, and shareholders will receive 1 share of STL Network per share. Mind you, 24th April is set to be the record date for the spin-off. Next up is Devyani International. Even this stock will be in focus as board meeting is scheduled tomorrow for issuance of equity shares for the acquisition of controlling stake in Skygate Hospitality Private Limited under the brand Biryani by the Kilo. Now, let us look at the important results that we'll be closely watching out for. Axis Bank, Tech M, HUL, Nestle, SBI Life, ACC, and L&T Tech, all these companies will be in focus as they will be reporting their Q4 FY25 numbers tomorrow. So all in all, looks like quite an eventful day tomorrow.
Okay, all right, got it. Upasana, thank you very much for that. Indeed, it's a heavy day for earnings, plenty of large caps and mid caps. And of course, we're going to be there.
Expiry as well.
And there's expiry as well, yeah. So hectic Thursday coming up, and we'll be there to take you through all the action. But for now, from the entire team that puts this show together, thank you very much for watching. News and updates continue on the other side.